Get ready for a potentially challenging day as Nifty's breakdown threatens a 225-point drop. Welcome to Trade Vision Pre-Market Report. Good morning, traders. Welcome to Trade Vision Pre-Market Report. Today, 2026, July 23rd, Thursday, we embrace another vibrant trading day. It is Sensex expiry day. Let us deep dive into the detailed reports. Escalating US-Iran conflict with renewed strikes and Houthi threats to Red Sea shipping has pushed Brent crude to near $95 a barrel, its highest in over a month. This sustained rise in global energy prices could weigh heavily on India's current account deficit and fuel inflation, putting pressure on import-dependent sectors and potentially dampening consumer sentiment ahead of key festive demand. President Trump has announced new 100% tariffs on generic drug imports to the US effective August 2028. Though a 2-year tariff-free window begins August 2026. While an immediate impact is cushioned, this move signals persistent protectionist trade policies that could create uncertainty for Indian pharmaceutical exporters, potentially limiting long-term growth prospects in the crucial US market. The European Central Bank is widely expected to hold interest rates steady today. Yet market watchers anticipate a hawkish signaling that keeps the door open for a September hike, driven by persistent inflation concerns. This potential tightening in Eurozone monetary policy could influence global liquidity flows, impacting FII sentiment towards emerging markets like India and potentially affecting currency valuations. The Reserve Bank of India's July 2026 bulletin highlights India's economic resilience despite global uncertainties, citing healthy domestic demand and robust performance across industrial and services sectors. This assessment, alongside improving liquidity and foreign investment inflows, could lend support to broad market sentiment, favoring domestic cyclicals and financials, leaving room for continued growth expectations across key segments. US President Donald Trump's announcement of phased tariffs on imported generic medicines effective August 2028 signals headwinds for Indian pharmaceutical companies heavily reliant on the US market. This policy shift triggered a broad sell-off in pharma stocks yesterday. The news could weigh on the Nifty Pharma Index, placing renewed focus on firms with diversified revenue streams or stronger domestic presence. Escalating geopolitical tensions between the US and Iran see a 12th consecutive night of American strikes, while Houthi rebels claim targeting oil tankers in the Red Sea, threatening critical shipping lanes. This intensification could keep crude oil prices elevated, putting the spotlight on import-dependent sectors in India like airlines and manufacturing, while potentially lending support to energy producers. Ukrainian President Zelensky has dismissed the country's commander-in-chief amid Russia's intensified drone and missile attacks, including strikes on Kyiv. This leadership change, coupled with ongoing hostilities, could weigh on global risk sentiment, leaving room for cautiousness across broad markets, with some indirect focus on sectors sensitive to European stability and aid flows.
You are watching Trade Vision! Smash that subscribe and enable the bell button right now. Like and share this video. Comment your love and share your happiness. Let's win together!
Foreign institutional investors sold 819.20 crore today. Domestic institutions also net sold 418.26 crore. This dual institutional selling suggests a negative bias for today's market, likely leading to downward pressure. If we look at yesterday's sectoral data, we see a clear rotation with money moving into defensive Nifty FMCG and cyclical Nifty Auto, both showing positive yesterday's moves and strong weekly momentum. Conversely, funds are exiting Nifty Media and Nifty Realty, which experienced significant declines yesterday and negative weekly trends, indicating a shift towards safer, more established consumer plays. Let us look at global events. The Reserve Bank of India's Monetary Policy Committee meeting is scheduled for August 3rd to 5th, 2026, with the outcome announced on August 5th around 10 a.m. Indian Standard Time. This upcoming event will significantly influence India's interest rate trajectory, impacting rate-sensitive sectors like banking and auto. U.S. crude oil inventories unexpectedly rose by 2.0 million barrels for the week ending July 17th, reported yesterday, July 22nd, at 8 p.m. Indian Standard Time. This beat expectations of a 1.0 million barrel draw, a positive for India by potentially lowering crude prices and easing. China's central bank held its one-year loan prime rate at 3.00% and the five-year rate at 3.50% on July 20, 2026. This decision was in line with expectations, signaling a cautious policy stance that could influence global growth sentiment and U.S. initial jobless claims for the week ending July 18, 2026 came in at 208,000 today, July 23rd, at 6 p.m. Indian Standard Time. This figure beat the consensus of 210,000, signaling a resilient U.S. India's Consumer Price Index for June 2026, released on July 13, 2026, at 3:30 p.m. Indian Standard Time, came in at 4.38% year-on-year. This beat the street's expectation of 4.30%. Global markets were mixed overnight. Europe rallied while US tech dipped. Asia saw selective gains in Korea and Japan, but Hong Kong fell. Indian traders should expect a flat to slightly negative start, navigating varied global signals. Now, let's move on to some Indian-listed stocks that are genuinely in focus for today's trading session. First up is Nestle India, which announced robust first-quarter sales growth of 25.4% yesterday, driven by strong volume increases across all product groups. We also have 3i Infotech and Allied Blenders and Distillers both holding board meetings today to consider and approve their first-quarter financial results. Additionally, IE Finance is in focus as its board meets today to consider fundraising through non-convertible debentures, while ERSS Infrastructure Projects will also hold a board meeting to discuss fundraising initiatives. Let's check what the RAS levels are indicating for today's Nifty movements. We're watching 24,076 as the breakout level and 24,061 as the breakdown level. Should the market turn bullish, resistances are at R1, 24,127, R2, 24,177, and R3, 24,228. Conversely, if the Nifty falls, supports will be found at S1, 24,011, S2, 23,960, and S3, 23,909. Today's CPR is centered around pivot 24,041, with the top at 24,064 and the bottom at 24,019. Analyzing the options matrix and derivative distribution, the structural shift for the 2026 July 28 expiry highlights a pronounced bearish undertone, with max pain gravitating to 24,100 from 24,200, while the put-call ratio sharply declined to 0.754 from 0.884 on 2026 July 21. This indicates aggressive call writing at 24,200 and put unwinding below 24,000, establishing 24,200 as critical resistance and 24,000 as immediate support for potential breakdown towards the 23,000 boundary, suggesting a tactical unwinding of long positions. The India VIX closed at 13.29, a 5.48% rise from its previous close of 12.60. This indicates rising volatility, especially with Nifty at higher levels, signaling a caution flag for a possible fall or crash risk in Nifty. The 5-day trend is mixed. The CPR is positioned at TC 24,064, Pivot 24,041, BC 24,019, expecting normal movements in the market today. Gift Nifty opened at 23,894, which is a gap down of 68 points compared to Nifty's previous close of 23,962. This gap down suggests a bearish start for Nifty 50 today, though confirmation after market open is key. The no-trade sideways zone is identified between 24,061 to 24,076, indicating likely sideways movement within this range. A move above the breakout level of 24,076 could yield 81 points, reaching 24,157. Conversely, a move below the breakdown level of 24,061 could result in a fall of 226 points, reaching 23,836. Previous trading day, Nifty moved minus 154 points, indicating a bearish session. The weekly move was minus 194 points and the monthly move was 99 points. The close did not sit tight against either extreme, so no strong directional carryover signal into today. Moving on to the final market verdict, the segment our viewers wait for. Indian markets are poised for a decidedly bearish session today. Both the Nifty and Sensex closed yesterday with a bearish bias, with Nifty down nearly 0.8% and Sensex down almost 1%, both sitting below key breakdown levels. Nifty futures signal a short buildup, with prices falling 143.1 points and open interest increasing by over 130,000. This negative sentiment is amplified by the India VIX, which jumped over 5% to 13.29, indicating rising fear. Foreign and domestic institutions both sold heavily, with foreign institutional investors offloading over 819 crore rupees and domestic institutional investors selling more than 418 crore rupees. Options data further supports this bearish view, with a put-call ratio of 0.754 and strong resistance from heavy call writing at 24,200 and 24,000. Global cues, including a 67.5-point gap down in Gift Nifty, also point to a negative open. While our custom RAS EMA indicator shows a bullish trend across all indices, this stands in stark contrast to the overwhelming technical and sentiment indicators. Expect a challenging day. And that wraps up our Trade Vision pre-market report. Don't miss tomorrow's insights. Please subscribe and hit that notification bell. If you found today's broadcast valuable, give us a like and share it with your network. We'd love to hear your thoughts and suggestions in the comments below. Here's to a truly prosperous day.